Welcome to today's market report.
The S&P and Nasdaq closed at record highs as tech continued to rack up gains on Monday, while positive coronavirus vaccine news fueled a rally in pandemic-pressured sectors of the market. The Dow Jones rose 1.36%, the S&P 500 and Nasdaq Composite rose 1.05% and 0.6% respectively to close at all-time highs. Signs the US is stepping up efforts in its fight against the coronavirus pandemic eased investor worries about the pace of the recovery. The Trump administration is reportedly considering a push for an emergency use authorization for AstraZeneca's potential coronavirus drug ahead of US election in November. Also helping sentiment, the US Food and Drug Administration granted emergency authorization for the use of convalescent plasma as a treatment for patients hospitalized with the virus. Positive virus treatment news sent cyclical sectors like energy and financials sharply higher, lifting the broader market. Energy was also helped by a rise in oil prices as oversupply worries eased after more than half of U.S. production in the Gulf of Mexico was temporarily taken offline ahead of two tropical storms this week. Tourism and travel sectors, which have acute exposure to the pandemic, also trended higher, with airlines and cruise lines among the biggest gains. Carnival and American Airlines added 10%, while Wynn Resorts and Expedia closed up more than 4%. Tech also played a role in the rally on Wall Street, with Apple in focus after closing a record high ahead of its 4-for-1 stock split. Morgan Stanley lifted its price target on Apple to a street high of $520 from $431. Tesla, meanwhile, closed 1.7% lower after giving up intraday gains. On the FX front, the GBP-USD pair lost more than 100 pips on Friday and staged a rebound at the start of the week. However, the pair lost its momentum after climbing to 130-150 area and erased all of its daily gains. As of writing, the pair was down 0.15% on a daily basis at 130.68. In the absence of significant macroeconomic data releases from the UK, the greenback's market value remained the sole driver of GBP-USD's movement on Monday. The upbeat market mood caused the US dollar index to drop below 93 during the first half of the day and helped GBP-USD edge higher. During the American trading hours, rising US Treasury bond yields helped the USD gather strength and lifted the index to a daily high of 93.30. The euro-dollar pair posted weekly losses for the first time since mid-June last week, but staged a rebound during the first half of the day on Monday. However, the pair met resistance near 118.50 and erased its daily gains. As of writing, Eurodollar was virtually unchanged on the day at 117.96. The pair will be in focus tomorrow with the German IFO report and revisions to their Q2 GDP scheduled for release. While investor sentiment improved, PMIs were weaker, a sign that the Eurozone economy is also losing momentum. This suggests that tomorrow's German IFO report could decline, which may turn Eurodollar's pullback into a deeper correction. Virus cases in Europe are also on the rise, with Germany, Italy and Spain reopening on Friday, the highest daily coronavirus infections since April. As schools begin to open and the flu season picks up, the concern for a second wave could underpin the euro. Dollar-yen perked up a little today, but the dollar's greater strength was against other major currencies. Outside of New Zealand's quarterly retail sales index, there were no major economic reports released in the last 24 hours. Consumer spending in New Zealand dropped more than 14% in the second quarter. Although this was slightly better than expected, it is still the worst decline ever.
This is today's market news. Thanks for listening. We'll see you next time.